So the adjustment says the electricity and water account for February 4,000 has not yet been paid. Electricity and water 25,000 Rand is allocated to the factory and the rest is allocated equally between the office and the sales department. Alright, so they're saying, let's go and have a look at the electricity and water. They're saying C number 3, the electricity amounts to 31,000. They're telling us that we have not paid 4,000. So I'm going to add the 4,000. I'm going to be adding the 4,000 Rand. And then they're saying that electricity and water for the factory is 25,000 Rand. Alright. So the rest is obviously going to be divided according to the sales and the office. So let's work out what is that. So if we say 31,000 plus 4,000 subtract to the 25,000 that is due to the factory, how much is left? The 10,000 Rand, which obviously will be divided. So let us go and have a look at that calculation. So here we go, the 31,000, I'm adding the 4,000 that's still due and I'm subtracting that 10,000. Why am I subtracting that 10,000? Because 25,000 Rand was for our factory. Then we have depreciation. They say that, okay, so this is done. Depreciation is written off all vehicles at 25% on cost and all equipment at 20% on the diminishing balance method. So we have factory equipment, office equipment, and sales vehicles. Remember, we are in factory overheads. I'm only interested in the actual factory. So the cost is 500,000 and our accumulated depreciation is 180. Remember, what is the diminishing balance method? I'm taking the cost price, subtracting the accumulated depreciation in order to get my carrying value. What is a carrying value? It is what your actual asset is worth. And then we will multiply it by the percentage of 20%. So let's go and see our depreciation. 500 minus accumulated depreciation of 180,000 multiplied by the rate of 20% and I should get 64,000. If I add all those figures up, my factory overhead costs amounts to 582,000. Where will I take that from? Note 3, factory overhead costs goes to my production cost statement and I put down there 582,000. If I add my prime costs worth 1,038,000 and I'm adding the factory overheads of 582,000, I should get a total manufacturing cost of 1,620,000. Alright, then they told us that work in progress, there was no work in progress in the beginning of the year and there was no work in progress at the end of the year. So what do we do with our production cost statement? It will be 1,620,000. There's obviously no work in progress at the end of the year, so nothing to add to and nothing to subtract at the end of the year. So our cost of production of finished goods is worth 1,620,000. Now remember, ladies and gentlemen, this is your cost price of the goods that you have produced during the year. So what are you going to do? You're going to go to your income statement and you're going to put it over there. Cost of finished goods sold, or your cost of sales, 1,620,000. Simple, isn't it? All right. Then we are going to obviously work out our selling price. How do I work out selling price? Selling price equals cost price times 100 plus the markup over 100. Do you remember that formula? Selling price equals cost price times 100 plus the markup over 100. Did they give us the markup in this particular exercise? They didn't give us the markup, but they did give us the selling price. They told us that our sales are all on credit and the sales is worth 2,916,000. If we want to work out the markup, we will say 2,916,000, which is our selling price, minus the cost price worth 1,620,000 over 1,620,000 times 100, and it will give us an 80% markup, which is why we came to this calculation over here. Our cost price times 180 over 100, and it gave me our selling price, which they obviously gave in the information. How do I get gross profit? I'll take sales minus cost of sales, which gives me my gross profit. And then we've got to work out the selling and admin costs. The note is given to you. It's the very same calculations. Very same calculations. Let me just take you to the actual. Here's the selling and distribution costs. When it comes to the cleaner, remember the ratio was 4.1:1. Cleaner, the 42,000 in total, and instead of using the 4 which we had done in the factory overhead, we are now using 1/6 as I done in the calculation over here. All right. The sales commission, they took the selling price. You can see that there was a mistake. The selling price is supposed to be the 2,916,000, but they have 2,880,000 minus the bad debts. All right, because if we have a look at this adjustment, they say commission to the salesperson is 5% of total sales less bad debts. They told us that all our sales is worth 2,916,000, and I'm going to subtract the bad debts over here. So do you see that there was a mistake over here? It should be 2,000,000. It should be 2,916,000, but in order for our production cost statement to work out, we're going to work on this mistake. All right, so please take note that was not the correct selling price. Once we subtracted the bad debts, I then multiplied it by the 5% in order to get the commission for the salesperson. Cleaning materials, remember we had opening stock. I purchased on credit during the year, and I'm subtracting what I have left on hand, and I'm working according to the ratio, which gave me 6,000 rand. Rent expense, I'm taking the total amount of rent. Remember the square meters. Selling and distribution takes 220 square meters, and I'm going to divide it by 1.2, the total amount of square meters, which gives me 79,200. I do the very same with insurance. Factory, the electricity and water, remember 25% is utilized in the factory, and then obviously what is left is 10,000 rand divided by 2 gave us 5,000. Packing material, what did they say about packing material? The sales department had not used 20% of the packing material which they had purchased during the financial year. So here's packing material, 52,000 rand. And we didn't use 20,000. So remember, if you don't use, you have to subtract. So let's work out So instead of using 100%, we're going to say 52,000 times 80 because we never use 20% of that, which will give us 41,600. Our bad debts is 78,000. Bad debts is an account that will only go to the selling and distribution cost department. Why? Because there is where they sell. On credit, you get debtors, and debtors sometimes don't pay your money back. Then we had cell phone allowances to our salesperson, which we had over here. Cell phone allowance to salesperson, it was 12,000 Rand. And then sales vehicle expenses, the 30,000, it was given in our adjustments. And then remember the vehicle for our selling, let's go to our fixed assets, sales vehicle 240, and then they said vehicles is on cost 25%. So I'm just going to take the 240 and I'm going to multiply it by the 25%, and it should give me my depreciation of 60,000. I add all of these up and it should give me my selling and distribution costs. We'll do the very same with admin costs. Same ratios, same square meters, obviously just different, but that's how the calculation will work out. And then in this case we have the bank charges that is different. All right. If we add these two up, it should go to other costs in your income statement. So there's our selling, note 4 and note 5. I added those two together to get the total of other costs. Once I have that, I'm taking the gross profit, I'm subtracting other costs, which will give me an operating profit of 635,300 Rand. And then we had interest income. What did they say about interest income? So our fixed deposit in 20.7 was 60,000 Rand, and then in 20.8 it's 66,000. So you see that there was growth there. How does a fixed deposit grow? Either the owner of the business can increase the investment by actually contributing more money to it, or it can gain interest that is capitalized on the fixed deposit. And if we find the difference, it should be 6,000. So let's go to our income statement. We have the 66,000 minus 66,000, 66,000 minus 60,000, which gives us a total of 6,000. I add that interest income and I now have a total of 641,300. The interest expense, what did they say about our interest expense? Okay, so if we have a look at the adjustment number 8 on page 444 in your textbooks, it says interest on the loan is charged at 18% per annum and the loan is to be repaid in 5 years' time. So you'll see that our loan over here is 200,000 and I'm going to multiply it by 18%. And that should give me my interest expense for those years. And you'll see that it is 36,000. My net profit for this activity is going to be 605,300 Rand. If you have any questions on this activity, please let me know via the WhatsApp accounting group. Moving on to task 13.7. These are your answers. Profit per item, the selling price was 24,000. I'm subtracting the variable cost per item and it should give me a total of 8 Rand. How do I know how many products I should sell before I break even? I'm going to take my fixed cost worth 160 and I'm going to divide it by 8 Rand. And I got 20 items to break even. Alright, 50 Rand minus 30 Rand equals 20 Rand. I take the total costs. The fixed costs in total is 1,000, and I'm going to divide it by 20 Rand in order to see how many products I have to sell to break even, and I get 50 Rand. Very same thing, we work out the difference between the selling price per item and the variable cost per item. 75 minus 45 equals 30. 900 divided by 30 Rand, I need to sell 30 items. Alright, then it gets a little bit tricky over here. You will just say 750 divided by 15 Rand. It will give you 50 items to break even. 750 divided by 15 Rand, we have to sell 50 products to break even. How do I get this 25 Rand? I'm going to take the 50 Rand, subtract the variable cost, and I'm adding the 15 Rand per item, and you should get your 40 Rand. Alright. Then the next one, 144 divided by 12 Rand, which will give us 12 items to break even. Then I will add 12 Rand plus 68, which will give me the 80 Rand. Then the very same thing over here, we'll work out 80 minus 54 Rand, it will give us 26 Rand. And then we'll take 26 Rand multiplied by 24 items, which will give us that amount.